Hello and welcome to episode 7 of our video series on the IRS collection process. My name is Hortencia Torres. I am a tax attorney with over 2 decades of experience. In today's video, we will be discussing an extremely important topic, tax penalties. However, before we go any further, I would like to invite you to download our free guide, in which you will find everything you need to know about the IRS collection process, including today's topic, but is covered in much greater detail. And now, let's get straight into it. You might be surprised to learn that the IRS does not consider tax liens or levies as penalties. These are just measures to collect debts. The real penalties are much more severe and could even warrant jail time. First, we have the failure to file penalty. It is imposed when you file your return after the due date and in an absence of a reasonable cause. The penalty amounts to 5% of your tax liability for each month or part of a month that your return was due, up to a maximum of 25%. In addition, if 60 or more days have passed since the due date for filing, the minimum penalty will be $135 or 100% of the amount due, whichever is higher. Next, we have the failure to pay penalty. At the time of filing your return, you must have paid 90% of your tax liability during the year. Otherwise, you could be penalized to pay 0.5% for each month or part of a month of the unpaid amount due, up to a maximum of 25%. Then, if you fail to make estimated payments and owe more than $1,000 at the time of filing, you can get the penalty for underpayment of estimated taxes. The penalty amounts to an interest charge. Finally, we have the accuracy-related penalty, which you can get if you submit inaccurate information in your tax return. And the penalty amounts to 25% of any underpayment of federal taxes. Well, I hope you found this video useful. I will see you again in the next one. Until then, don't forget to download our free guide on the IRS collection process.